Happy Monday and welcome to the Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Gincola, and today we are covering Hyundai's massive $20 billion U.S. investment and how the automaker plans to dodge tariffs and dominate the electric vehicle market, and Supermicro's AI surge and why this stock is skyrocketing and what it means for the AI infrastructure. And 23andMe is filing for bankruptcy. What went wrong and what's next for the DNA testing giant? And StubHub has an IPO. Will their numbers impress investors despite financial losses? And retail investors are growing the influence on the market and why JP Morgan is raising the alarm. Stay tuned because we got the details coming right up. All that and more. Let's get down to business. All right, so our first story is that 23andMe files for bankruptcy, and the CEO has resigned effective immediately. So shares of 23andMe are absolutely crashing down over 40% in pre-market trading after the DNA testing company dropped a bombshell that it is filing Chapter 11 bankruptcy, and if that wasn't enough, their CEO just resigned effective immediately. Now, here's what's going on. The bankruptcy filing is designed to facilitate a sales process to maximize the value of its business. So essentially, they're hoping someone will step up and buy what's left over or what's worth saving. And their CEO, who has been the face of 23andMe for years, has previously attempted to take the company private last April, less than 3 years after it went public. And while she's stepping down as CEO, she will still remain on the board. Now, this whole situation highlights just how deep the company's financial troubles go. And remember, 23andMe was once considered the groundbreaking leader in consumer DNA testing. Now, it's just in survival mode. Now, what happens next? The sale process could mean the breakup of the company or maybe even a strategic acquisition. But one thing is clear. There is a huge amount of uncertainty with 23andMe. Will somebody come in and acquire 23andMe? Or how will this bankruptcy process affect their operations and partnerships moving forward? We'll keep you posted. Next, online ticket reselling platform StubHub has officially filed for their IPO. So StubHub has officially filed for their initial public offering, and they're planning to list on the New York Stock Exchange under the ticker symbol STUB. So here's what we know. StubHub has reported some impressive numbers. Over 40 million tickets sold in 2024, with gross merchandise sales hitting $8.68 billion, which is up 27% year over year. But despite that growth, they posted a net loss of $2.8 million in 2024, just after being profitable to the tune of $405.2 million just 1 year before. Now, according to their SEC filing, the company has previously delayed their IPO plans last July due to weak market conditions, but now they are moving forward. Now, the big question here is, will the market respond positively to another ticket reseller going public, especially one that's now showing financial losses? And it's really worth asking, is their business model truly sustainable, or if the volatile ticket market will keep holding them back? Now, StubHub's success will largely depend on how investors view their growth prospectus and whether the platform can thrive despite that industry competition. It's going to be interesting to see how the market reacts to this one. JP Morgan warns of retail investors' influence and is the market overheating? So, according to JP Morgan, U.S. households now hold a record 60% of the U.S. equities, more than institutions. That's right. Individual investors are now the dominant force in the stock market, which is a very cool thing to see. But here's where it gets interesting. While retail investors have been one of the biggest drivers of market growth over the past few years, we're starting to see signs of nervousness, and JP Morgan says U.S. households held about 42% of total financial assets in equities during the first quarter. That's slightly down from previous record levels, which suggests that some investors are pulling back due to market volatility and economic uncertainty. Now, why does this matter? Well, when retail investors start heading for the exits, it can have a huge impact on the market overall. And if these folks get too spooked, we could be looking at more volatility ahead. Now, the question now is whether retail investors will keep fueling that market growth, or if the fear of a recession and economic stability will prompt a more significant pullback. We'll be keeping an eye on this trend and what it means for the market's future. Hyundai has a massive $20 billion bet on America. So Hyundai is pulling out the big guns, and the South Korean auto giant is about to announce a jaw-dropping $20 billion investment to beef up its American operations. And it's happening today at the White House with President Trump. And Hyundai Chairman Yu-Sang Chung and Louisiana Governor Jeff Landry are all making appearances. So what's the plan? Well, $5 billion of that cash is earmarked for a brand new steel plant in Louisiana. It isn't just any steel plant. It's expected to hire around 1,500 people and produce next-gen steel for Hyundai that will use to build its electric vehicles. And 2 U.S. auto plants in Alabama and Georgia. And they're not stopping there. Hyundai is also planning to open a third plant in Georgia, doubling down on its manufacturing processes. So why now? 2 words: tariff deadline. So President Trump's April 2nd deadline is looming, and foreign companies are racing to get their U.S. operations up and running and dodge the potential tariff war. Now, Hyundai knows the game and is making a bold move to localize its production and avoid any NAFTA penalties. But here's the kicker. Hyundai is one of the top electric vehicle sellers in the U.S., competing directly with giants like Tesla, and by boosting their U.S. manufacturing capabilities, they're positioning themselves to dominate the American EV market. So what's the bigger picture? We're going to see how this is going to impact U.S. automakers in the future. Lastly, Super Microcomputers is surging this morning. So Super Microcomputers, or SMCI, is their ticker symbol. Shares are on fire, soaring nearly 40% this year as the company positions itself as a key player in the AI infrastructure space. On Friday, the stock jumped another 7.8% after analysts highlighted the company's increasing demand for AI shares. Despite some previous setbacks with accounting and corporate governance issues, Supermicro has bounced back and is seeing significant revenue growth from AI demand. Now, with AI infrastructure becoming a hot commodity, Supermicro is making moves to solidify its standing in the market. Now, the big question is, can Supermicro maintain this momentum as more competitors start to drive the AI hardware space? And of course, we'll be watching how the AI boom continues, because this is going to be a massive, massive portion of how investments perform in the future. Listen, thanks for tuning into the Business Show. If you know someone who would find value in this episode, share it with a family member or friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. It helps us reach more people with this message. And don't forget to follow on Apple Podcasts, Spotify, YouTube, or your favorite podcast player app. Thanks again for listening, and we will see you on the next episode.